Hey guys, Adam here at DirectionTrader.com. Let's go over a question I got today. It was from a guy in the trading room. He's new, but I do want to bring it up and kind of answer his question because it's a good question, good topic for a video. How to stop overtrading. It's a question that comes quite often, and it's a question that I think a lot of people, if not most people, have struggled with, especially with their trading. Today's actually a very good day to bring this up because I'm going to go over today's markets. I'm going to go over the crude and the S&P at the moment. This is crude, and then we got the S&P over here. These are actually my trading time frames. As you see, I use tick charts for my intraday trading when I'm in the live trading room, and this is a similar setup to what you would see in the live trading room. The reason I say it's a good day for the video because today was a trading day. Today was very easy to pick a direction and pick a side of the market and pretty much stay on it. We stayed short the entire day. We were shorting the entire day in both these markets. Took trades in the S&P and in the crude and was short the entire day. So basically what I would originally tell that person is use more than one time frame, first off. By using more than one time frame, you can basically go out to the longer time frame, and my recommendation is 3 times your trading time frame. So if you're trading a 5-minute chart, use a 15-minute anchor chart. If you're using whatever, say a daily, you can use a weekly or whatever it may be, just a longer time frame. In this instance, if you're using a 233 tick chart, use something around a 700 to 1,000 tick chart as your anchor chart. So anything along those lines will work. But what have I done here to make it easier? Obviously on another monitor, I monitor multiple time frames, not just this. But on this time frame, I've added just my trading time frames for the 2 main markets that I trade. I do venture out to other ones. But these moving averages tell me a lot. And to simplify this and to stop over trading, what I have here is my conventional 21 and 50 EMAs. Those are the faster moving averages here, the ones you see that are closer to the price. After that, you'll see another cloud, kind of a cloud looking thing here, and it actually changes colors as the market trades up and down and so on and so forth. What that is the same thing as using a longer time frame. It's 3 times the moving averages. So on here, you would have a 21 and a 50, and then a 63 and a 150. Now, why would you do that, Adam? Very simple. The reason I did that, because I like the 21 and 50. I want to go in that direction. I want to see the market breaking in that direction. Why would I add the 63 and 150? It's simply 3 times, guys. Just like I said, if you're using a 5-minute, use a 15-minute anchor chart. The same thing. If I were to use a chart 3 times the length of this, that would be a 699 tick chart. And the 21 and 50, those are my 2 favorite time frames, my fast time frames for intraday trading. Those 2 time frames, those 2 moving averages on this time frame would be equivalent to the 63 and the 150 on the 233 tick. So if I didn't confuse you, let me explain. Let me hurry up and throw up a crude chart here, and this is just to get you set up, and then I'm going to explain this with much more detail here in just 1 second. If we just throw up, say, a 699 tick chart here, and we hit the enter button here, and now we got crude up here. We got 699 on the right, and we got a 233 on the left. So let's go into the same day, same time frame, and let's take a look here. Now this faster one here is the 21. And then over here, the slower is the 63 150. Now, let's take a look at my cursor. You see right here, that is where the 21 and the 50 cross to the downside on the 699. And if you look to the left over there, you're going to see that same time frame is whenever the longer 3 times crosses as well. Let's go back here. Let's go and find a little bit easier example to see. Okay. Let's go back here. Here's a little easier example. Looky here, the 21 crossed the 50, right, guys? See the 21 crossed the 50 on the longer time frame? That's the same as equivalent to 3 times here. So here's where the 63 crossed the 150. So why in the world is this guy telling me all this stuff? Bottom line is I'm doing this to help out picking a side. So if you're over trading, you're a beginner, you haven't made it there yet, you're still finding yourself over trading, picking longs, picking shorts, sideways choppy days are not going to be the best trading for you. But if you can be patient enough to wait for a trending day or follow these simple rules, if the longer time frame, the longer cloud, if you're using one time frame, is bullish, so green, you're only going long. If it's red, you're only going short. And if they're in between, tied in here together, I call that spaghetti string, you're neutral. You're nothing. Okay? So let's simplify this. Let's go and take a look here. Let me get rid of that. And let's go through some of these markets. And let's see exactly what we're looking at here. If we were to be trading, I use a lot of Fibonacci's, guys. So we see the bigger trend is up. We pulled back. We're still green. Let's wait for a bounce here. And I use a lot of Fibonacci's. There's a bounce. Only taking longs. Good trade, right? Only taking longs until here. Now we've broken. And we're broken down, but it's still green, guys. It's still green in here. So there's no trade. And then we're getting the spaghetti, no trade. Now, we've now had it cross to the downside. And we're only looking short. What do we have here? Another nice pullback. We could get another opportunity to the short side. And if you're aggressive and for some reason you found some type of Fibonacci pullback here, no big deal. It did trade in your direction a little bit, depending on your trade management, whether you got a free trade or a limited risk trade, you don't know. But all these pullbacks, you're not gonna be going long here. Not gonna be going long here. Kind of missed the boat here, right? So it's gonna happen. And as you see this thing trading up, you're gonna have nice little pushes up, and now you're only long. So you're only long. Got another there, nice little pop to the upside. Another pop to the upside. And this is pretty simple, guys, and we use this every day in the room, so I know for a fact it works. And if you're thinking, hey, this market's rolling over, it's rolling over, it's rolling over, it's getting weaker, just wait, because you can't go short here, because why? The longer moving averages are still showing you that, hey, the meat of this move is still to the upside until we can break to the downside. And then you find more trades and more pullbacks. So if you're a pullback trader like myself, this is very, very helpful. Now looky here. As we've crossed to the downside, we're only looking for what? Shorts. Simple pullbacks, guys. I actually took this today in the room. Very, very early. Took this right out of the morning. Pulled back and took this short to the downside. Great way to start the morning. Guess what? We took another pullback here. Great way to start the morning, right? We're only short. And as we kept on going, I think I actually took one right down in here too, and it pushed down far enough for me to drag my stop to my entry. It ended up being either a reduced risk or a free trade. I can go back and look at my log because we took a lot of trades today. When I say a lot, I think it was 7 trades, and that's a lot for me in the room. But it was a very trending day. So as it traded up here, we was only looking for shorts, We could not go long here, so just wait. And then as we got this pullback, if you're somebody that found some type of buy signal in here, you could have taken it because we did cross to the upside. Then after that, sure enough, we rolled over. We got a pullback and shot to the downside. Now, I did not take this short here, but what I did take was the very next one. Pulled back up to this 50% level, retested this high, and we shorted again. But once again, what am I trying to iterate? Is staying in the direction of the longer trend. That's going to keep you out of over trading. You're not going to try trading to the upside. It's basically keeping you on one side of the market. It's taking all your emotions out of trading, for half your emotions out of trading, and it's already telling you which way are you trading. I'm only shorting here. So this is going to work real well in a trending day like today. You're going to make most of your profits on a day like today. But let's go back and let's look at a choppy day. Look at this. This is Monday. Monday was slow, wasn't it? But guess what I had a lot of on Monday? A lot of free trades. Here's what happened on Monday. We started to roll to the downside. I'm trying to short in here. I get a nice profit. We try again. Guess what? Reduced risk. We drag our stops down to our entries. So I got reduced risk. Then we wait. And we get a pullback. Nothing yet, but we did get a push to the upside here. I don't think I took a trade here on Monday. I think I didn't get anything here. But as the market rolled over, guess what? I took this short here, this pullback here. I think I got a fill here, barely. It only went a little bit, like 8 or 10 ticks in my direction here. Enough for me to drag down to my entry price, so another free trade. Like I was saying though, a lot of free trades on Monday simply because it was a sideways market, which is very typical. In a sideways market, you can adjust your money management to where, hey, I'm picking the right side. This is where the momentum is, but I'm not able to get the follow through. And as you see, if you were to do this, you see nice follow through here to the downside, and so on and so forth. But the point of this video is kind of going out to maybe a handful of guys in the room, maybe a few more than that, and then anybody else who's having trouble stop over trading. Add a couple time frames. One, if you want to use one time frame, pick a couple moving averages. I like to use a 21 and 50, and then use 3 times that, and only go in the direction of the longer time frames. Does that make sense, guys? So that's it for now. If you have any questions on this, leave a comment on this video, and I'll get back to it. I'll see them, and I'll respond back to you. But if you have any interest in seeing me do this live in real time in the room, and pick these directions, there's very little emotion that goes through goes on in the trading room, guys. I'm very defined on which way I want to trade and what I'm looking for and prices I'm looking for. So if you got any interest, come and take a trial in our live trading room and actually watch as I do this live. So that's it for now, guys. Like I said, if you got any questions here, leave a comment on this video. If not, you have a good day.